Hey everybody, it's Brett Fogle with your weekly crypto market recap. Got a lot to cover here, and we're going to go fairly quickly. Just wanted to give you guys a quick wave hello. Hope you guys are having a good week. So with that, let me just share my screen here and bring that up, and we'll dive right in. Okay, so I'm going to turn off the camera so you guys can just look at the charts. So with that in mind, let's dive in. So in terms of the news here, let's just take a quick look. Had a somewhat, no, not entirely unexpected rally. I was not expecting Powell to have bullish comments, or so the market has interpreted this. So Bitcoin's back above 20,000, and so we'll see what happens. It's kind of a bearish rally as the US dollar falls. We'll look at the DXY and why that's relevant, because as we know, it has an inverse relationship. So we did see kind of a surge last night. I was watching that yesterday and watching this thing surge up. We'll come back to this and what that means and sort of unpack that here in a moment. But some more news here. Just Bitcoin squeezes past 20K on the US dollar dip as Bitcoin prices gain 8.7%. Look, my overall macro read on this is that they're going to kind of go easy and not tank the markets going into the November midterms, and so that the Fed has been saying they'd be easing up on their balance sheet, and the evidence shows they really haven't yet. So what that sort of leads me to believe is that the powers that be, aka the government, aka the bosses over there, really want to make sure we don't sort of destroy this economy and the markets at least sort of go easy until the midterms. But that also could mean that once that happens and those results are in, then they really sort of clamp down on things, which could kind of take things much lower. Otherwise, and in general, I am anticipating sort of bottoming, putting in, we may have found a bottom. I don't know yet. I think we're still going to languish a while going into the end of the year, November, December, and then we'll wait and see. But and possibly start running or going up in March of next year. So it's pure speculation at this point. But let's go ahead and look at our monthly charts here. So basically, these are the 3 past market cycles we've been watching. And on a monthly basis, what I'll call your attention to is that we almost had a bearish engulfing candle on the monthly, but didn't quite get there. So the bulls managed to eke out a little bit of a rally there in the end of the month here, but we're just holding at this level right at 20,000. Psychologically a very important level, and so there's some people pontificating, one of which is Mr. Wonderful from Shark Tank, who's now apparently a crypto investor. An expert, rather, is suggesting that we'll stay between 20,000 and 25,000 until we have regulation in these markets. There is some truth to that, by the way, in the sense that the big money on the sidelines that really wants to get into these markets at some point, the sovereign wealth funds, the big institutions and pensions, they really can't come in and invest in these markets unless there's regulation. So in terms of that, I think the next big rally, we have the next halving in 2024, but what could really spike this to decouple possibly from the U.S. stock market and NASDAQ and risk on assets, and certainly push Bitcoin and crypto much higher, is if we do see some meaningful regulation. However, that's not likely to just suddenly appear or happen overnight. Okay, so we are holding the line at 20,000 on a monthly level. This is sort of the macro you want to keep an eye on. Not much else happening here, although it does appear that we're starting to turn the corner here with this daily MACD or the monthly MACD, if we can close now in these same levels. And not lower. We are 1 week into the month, so this can certainly change. So this is just a possibility and a hypothesis. But I have drawn here what I would anticipate having happen and forecasting based on the run up here and these market cycles and swings that we do see and have seen throughout history, which isn't terribly long in Bitcoin. On the monthly RSI, though, we did get this nice little double bottom and bounce here. Whether it can bounce back above this sort of historic level remains to be seen. Again, we have to remember that we are in historic recession territory, and Bitcoin's never experienced this. The last time we went through all this was back in 2008, 2009, and of course, it really wasn't an asset class there. It was just something that was new and novel. So keep that in mind. Let's jump to the weekly here and see where we're at here. We are getting a bit of a bounce on the weekly, and in this accumulation zone, we, for all intents and purposes, retested the low from back in down in this area. Now, technically it was June of 2022. Maybe that was the low around 17.6. But we're holding in this range here around 18,000, it would appear. However, I'll call your attention to the 300-week moving average down below in black, the 200-week moving average in purple. Let's just zoom out a bit, which has traditionally been support and even mostly down in the COVID crash, although the bottom of the candle did come down to these lower levels. So the 300-week moving average, we've been watching this here for weeks now. And the point is that this 200-week moving average should now act as resistance. And so it tried to get back above it, couldn't hold, fell back down below. So we really need to watch this. And also interesting is we have the 50-week crossing down below the 100-week here, which is just starting to happen. And if we zoom out even farther, let me take off these Fibonacci's here, that this doesn't happen very often, but generally what it does signify, and we've seen this in the past year when this comes down through these, it's sort of, we're sort of maybe coming out of the bear market. So back in the last bear market here, we had the 50-week crossing below the 100. And by that point, we had already put in a bottom and we're slowly drifting higher. So this pattern is interesting. It's too early to tell. And then once the 50-week is back above the 100-week, we're not out of the woods, but generally that's when we're starting to drive higher. But for obvious reasons, it's a lagging indicator because it's weekly. It's just something to keep in mind. Let's take a look here at the ERI, and what are we looking at? Are we still in a bearish ERI, which is my early reversal indicator, which triggered back here when we broke down below the 200-week moving average. So personally, I'm not bullish here. I would like to see us come down to the 17,000, 18,000 region and put in another retest or test this 300-week moving average, and then see a weekly early reversal indicator. So it's a little bit small here, but these are our custom indicators that we mostly watch as an early signal, and then followed by other oscillators that you might also follow, like RSI and stochastics RSI, and of course our trend strength indicator. It's still in a bearish mode here, so I don't think we're really, I don't believe this rally yet. However, the end of the week will tell us more. And so if we push up here to the 200-week moving average, that will be the key test, is can it close up above this? And really, I would like to see it close above 25,000. So for me to believe this, we're going higher and having a bull run. Certainly could. We could be putting in a double bottom here like this to push up into this region, which still could be a bull trap, and then because of these lowering 50 and 100-week moving averages, come down again and put in a higher low. Or we could still see this scenario play out, hitting all the way down to the 400-week moving average around 13,000 if things get really nasty and ugly in the economy. So with that in mind, I'll come back. I'm going to pull up the DXY here in a moment, but here we have the daily on Bitcoin. And so what I'm wondering here is this bear flag pattern that did break. So technically the bear flag has broken down, and it's interesting that it's trying to push up here. This could be a fake out, everybody. I would not be FOMOing into these markets because in a technical stance, and I'll just take these off. These are meant to be representative of the 300-week and 400-week moving average here on the daily. But the bear flag target, the measured move, would put us down around this 14,000 range based on the flagpole up here. So, look, this, I guess if we could, I don't want to draw lines in the sand, but somewhere in this region, you see I have this question mark. And if we were to come down in this area, then this is right in that range of the 14,000 and even that 400-week moving average. So let's kind of keep our eyes open and see. We do have 10% push up on Bitcoin, but certainly could be some short covering and other things. On the daily basis here, I'm not seeing anything terribly bullish necessarily, but it's looking like it could be. This is our TSI breaking up above our 20 line. My signal line's going green, and my other indicator that we developed for this trend is setting up a key signal. So I'll be watching for possible bullish signs. But here's the thing: we're going into the weekend, and we want to be very careful Now, volume is up nicely, so we want to see this volume has been trending up here and over the last few months, which is interesting on overall. If we were to average it, hard to say, but it does appear to be growing and improving. All right, so with that, I do expect resistance here and some rollover, but it could go higher into the weekend. No clear signals either way. So not to talk out both sides of my mouth there, but hey, sometimes these things are not clear. And so with that, let's just jump over to the DXY. So what is interesting here is the blue line. If you're new to the channel and enjoying this, please do like and subscribe. The blue lines here are representative of the dollar index on a longer time frame, and this price action here was taken from a prior cycle and started to seem look similar. So I overlaid that onto this. I won't go back to find it, but this is the actual price action of the DXY in the past, and it may have been quite a while ago, but you see how these patterns tend to repeat. Isn't it interesting that we've come right up here to where I drawn this and overlaid this a week ago, and we're starting to pull back. Okay, so DXY hitting resistance and pulling back would push crypto and Bitcoin higher. The question is, how long? So if we see this, draw this out a bit, we could see it come back down in these areas to the DXY, which would be a short-term Bitcoin rally. I should have showed you that in the last chart there, where it could go up around 25,000. But then as the DXY pushes higher again, Bitcoin crypto would come down. That's how this all works. And I had drawn this a while ago on this larger time frame, huge cup and handle pattern, which is now breaking above this handle. So it would indicate, at least on the surface, that this could go much higher, and that would be very bad for crypto. So in terms of how high could we go, well, if we really zoom out here, we have broken past. I'm sorry, we haven't yet. I'm looking at the blue line. We're pushing up into this resistance area of the DXY from back in 2000s, which was a relative local high. However, we're in historic sort of economic situations with the Nord pipeline getting shut off. All the war is still pending. Lots of economic uncertainty, and the other currencies of the world are falling in value relative to the dollar. So what this means is we could certainly see here on a longer term basis pushing up into these regions, which would be bad. We really hope that doesn't happen, and that things do recover. But as the everything bubble name would indicate, this may not be out of the woods yet. So how about this though? If we push up and find resistance there and come back down as crypto rallies into 2024, it really remains to be seen. But to zoom out here, this is a kind of a 5-day chart. Let me move it back over to overlay, where I had it here just for time to sort of manage some time expectations. So that would put us kind of bottoming. Coming down with a rally next year, ostensibly, and then again early of next year, seeing another pullback. So that's a direct contrast to kind of what I was thinking in terms of the finding the bottom. So we just have to wait and see and watch the DXY. I was expecting, based on the number of days in prior cycles of Bitcoin, that we would bottom in November, December, and then start to push higher into next year. So these are obviously unknowns, and we'll have to wait and see, but it's good to have a thesis of what could happen so we can recognize that faster. So it's interesting here. Let me pull up Bitcoin dominance here, which has been dropping down as money has been flowing into ETH, it would appear. And we're getting a bit of a bounce here. I mean, we're sort of in altcoin season, air quotes, altcoin season territory, but in the overall economics of the whole market, there's not a lot of money flowing into alts. But it's interesting that money seems to be flowing back into Bitcoin here. We had seen money flowing into ETH here over the past few weeks, and actually past few since 2020. So this chevron shaped thing of the 5-day, just to fit it on one screen, money flowing out of Ethereum since 2018, changing the course in 2020. Mostly staying to the upper range of this upward chevron here before breaking down, obviously, during this past segment. But Ethereum dominance has been pushing higher overall, but it's seeing a bit of a resistance there. So that's interesting to watch. And you can see I have alerts here for hitting new highs. Big question is what happens here with the merge coming in a week or so. The final merge, I think people are being cautious here, at least with Ethereum. And my spidey sense is, hey, look, something may go wrong. And more than likely, though, what we'll see is it'll happen. It'll say, hey, everything worked out great. Ethereum surges, and then people sell the news, and then possibly something happens, right? So what happened with Solana last year? Well, DDoS attacks, they were targeted, took down the network, and then the price plunged. So, we have to sort of realize these markets are not friendly. They are designed to take our money, and for the most part in the shorter term time frames. So we have to be wary of these. So maybe that's a little bit extreme on that, but then I would imagine they'd fix whatever was wrong. So this is purely a guess, but would certainly not surprise me. So let me move this out of the way. So in that sense, we see this kind of a push higher, and I am going way off on the timeline. This would happen sooner than later. So let's do this over, because this is this is happening now. So basically, if we saw kind of a push like that, I keep grabbing the wrong thing here, and then some kind of a rally, and then some panic, and then we come down in here, and then it's like, okay, now everything's okay. So that's my best guess here. My little squiggly lines here have more than not played out here on some of these things. So with that, let's jump over to USDT dominance here, and I'll kind of widen this out a bit. Look at that. We did get rejected. I had this circle here on there based on basically these indicators that we use being an overbought area and getting a bearish ERI on that. So I was sort of pontificating on that last week. And so it looks like we are breaking down on this USDT dominance. But it's interesting. That means money is leaving USDT stable coins. And the question is, where is it going? Well, it looks like it's going into Bitcoin. That's what we were surmising there. Nice big surge on Bitcoin here. We're up almost 2,000 here just as we started recording here on this recap here. And let's just take a look here on the 1 minute, 3 minute short term. It's sort of falling, but we had this big surge here in the last few hours. Okay, so let's kind of keep things flowing here. What else do we want to look at? Well, we looked at Bitcoin. Let's take a look at Ethereum and see where we are with that. It's still edging higher, but there's resistance in this box in here. So I would keep in mind that we've pushed up here. This is sort of, buying the rumor, and wouldn't we be expecting sell the news on this? I don't know. 2,000 is a psychological barrier right at this top here. So my best guess is we push up, may not even get to 2,000, and then we sell off back into this range here. And this is kind of where some good buying opportunities may be. All right. So that's falls in line with that hypothesis that we push higher and then sell off on the news. Maybe there's a glitch or so. The media picks it up and says Ethereum is doomed, and everyone sells it. And then, of course, it's not doomed, and the smart money buys it all, starts buying it up down here. Okay, so very interesting. On my trend indicator, I am getting bullish signals on this in terms of my key and bell indicator, but so we may see some follow through actually on this over the next few days. I'd say Ethereum does push higher up into that 1,900, 2,000 range, but then probably likely sells off on the news and does one of these. So, depending on where we go, best guess. So, you might see some good swing trade opportunities going into the weekend. Let's take a quick look at anything shining bright in our watch list here, and just some coins that I follow. Rune, we're seeing a little bit of a pump on many of these things. Atom, I've been watching for days now, and actually was talking to some of my private clients on that just yesterday, saying Atom is bucking the trend, and it does beat run. How does it go? Beats to the marches to the beat of its own drum. So Cosmos here has a nice little channel forming, and I was watching this closely back in November, December of last year, and Atom was pushing higher when everything else was kind of coming down, and then it kind of it pulled back in. But nice little upward channel forming on that. And I see a note to myself on a weekly chart to keep an eye on something that, it did play out. And so back in here in my bell symbol, I do look for confluence on these indicators we use. However, on the weekly, was getting a bearish early reversal indicator there. So this push up on Atom, I think we'll see some profit taking on the daily basis here, but I'll definitely keep an eye on that channel. Okay, so with that in mind, but it is a strong project here. We've got some of these other ones that are up you know, maybe what if this was the bottom? We're putting in higher lows. These are the symbols that we want to watch for. But you know, these bear market rallies can be very dangerous. They can be very convincing, and look like it's a good time to get back in, when in reality it isn't. So just skimming through, not a whole lot looking terribly strong. And I would advise, not to give financial advice, but just advise, be careful going into the weekends here. Markets are up, could easily see some profit taking, see a couple of these over 10%, but still even the stronger ones breaking down on their upward trend channels. So I don't think we're out of the woods here yet, guys. So it's a good time to continue to sit on the sidelines and possibly take some base hits here if you're so inclined. And Ethereum still technically in an uptrend here, as we drew on that other chart, but likely we'll hit some resistance just to redraw these. These are things to pay attention to, and certainly traders will be keeping an eye on that. So actually kind of forming a symmetrical wedge here. So I would have alerts here at 1800, likely resistance at 2000, as I showed on the other chart. So, all right, guys, sorry to rush through all that. Not really a lot that's new here, but that's a nice little recap here, and just to explain why things are kind of pushing higher a little bit. And so what I'll do is just kind of jump off of the screen share here and give you guys a nice little wave. Wish you guys a good weekend, and we'll pick it up again next week for next Friday's market recap. Thanks, everyone.